Welcome to the Moral Crossroads podcast. We explore engaging topics daily, such as managing negative family dynamics, investing in real estate, starting a new career, learning a new trade, and much more. We invite you to tune in daily on this platform. This podcast shares information on investing, financial tools, moral guidance, clinical insights, and ethical considerations. It is intended for informational purposes only. The content provided does not constitute legal, economic, psychological, or moral advice and should not be interpreted as such. I'm Julie Hayes with my partner, Nathan Gray. Let's deep dive.
All right, everyone, buckle up, because today we are diving deep into the world of gold.
Ooh, shiny.
You sent us a ton of articles on gold and investing, so it seems like you're trying to figure out if this precious metal deserves a spot in your portfolio.
Makes sense.
And, more importantly, how to add it without, needing a degree in economics.
It's a hot topic lately, that's for sure.
Yeah, and especially with gold prices going kind of crazy high.
Almost record-breaking, actually.
Wild. Even CBS News was talking about how retailers like Costco and Walmart are selling gold bullion now.
It's true.
Can you imagine? You're just doing your weekly shop, grabbing some milk and thinking, well, might as well toss a gold bar in the cart while I'm at it.
It definitely feels more accessible these days.
Right. It's practically mainstream.
But remember, just because something is easy to buy doesn't necessarily mean it's a smart investment.
Good point.
Those high prices are tempting, but in the investment world, chasing past performance is usually not the best strategy.
That makes sense. So let's back up a bit. What actually makes gold a worthwhile investment in the first place?
Okay, so
why should someone even consider it for their portfolio? I saw a few articles. Forbes Advisor, Motley Fool, and Morgan Stanley were all calling it a safe haven asset.
right, a safe haven.
What does that even mean?
It's a great question, and it gets to the heart of why gold has been valuable for, well, basically forever. Think about it this way. When the market gets shaky, like during recessions or times of high inflation.
When things feel uncertain.
Exactly. Investors tend to flock towards assets that they think will hold their value, that won't just disappear.
They want that sense of security.
Yes, and historically, gold has been that reliable, stable asset.
Makes sense. And with all this talk about a potential recession, plus inflation still being a thing.
Right, it's on everyone's mind.
People are naturally looking for a safe place to put their money.
For sure. Gold offers that stability when other things are a bit, shall we say, unpredictable. Unlike currencies, which, governments can just print more of.
And which can lose value due to inflation.
Exactly. But gold is finite. You can't just make more of it, so it has this inherent value.
So it tends to hold its own when other assets might be tanking.
I got it.
So if I'm understanding you correctly, it's less about buying gold and expecting to make a fortune overnight and more about protecting your wealth.
Exactly.
When other investments are, going a bit haywire.
Think of it as a form of insurance for your portfolio.
Insurance, okay.
CBS News had a good way of putting it. They said, gold is more of a hedge than a growth engine, unlike, say, the stock market.
Interesting. So it's more about managing risk, maybe offsetting losses elsewhere in your portfolio?
Exactly. It's about diversification and security.
Okay, this is where I start to feel like I need a map and compass to navigate this whole gold investing thing.
Yeah, it can get pretty complex.
Luckily, I've got you and this giant stack of articles you sent.
Hopefully we can shed some light on it.
Speaking of which, both Fidelity and Forbes Advisor lay out a whole bunch of options for investing in gold.
Right. There are a few different ways to approach it.
So you've got your physical bullion and coins, then there are gold IRAs, stocks, ETFs, even futures.
It runs the gamut, that's for sure.
I'll be honest, I'm already feeling a little overwhelmed.
Don't worry, we'll break it down. It's true, there are a lot of choices, but which one is best really depends on, your individual circumstances.
Right, of course.
And your risk tolerance, how comfortable you are with the ups and downs of the market.
So for someone like me who's, let's just say, not a Wall Street expert, where would you even suggest starting?
Well, if you're just dipping your toes into gold investing, ETFs can be a good place to begin.
ETFs, okay.
Think of them as a simpler way to own gold without actually having to, store a bar of gold under your mattress.
Yeah, that wouldn't fit my safe deposit box anyway.
Exactly. So ETFs are basically, they're like baskets of assets.
Baskets.
Yeah. And in this case, Those baskets would hold either actual gold or shares of gold mining companies.
Oh, okay. So you're not directly owning the gold, but you're invested in things related to gold.
Exactly. And the good thing about ETFs is they're easy to buy and sell in the stock market.
So they're pretty liquid, so to speak.
Exactly. You can get in and out relatively easily without causing major price swings, unlike trying to, say, sell a house quickly.
That makes sense. But what if someone, wants to go for the real deal?
You mean actually hold that gold in their hands?
Exactly. I keep thinking about those gold bars at Costco. It's intriguing.
I get it. There's definitely a certain appeal to owning physical gold, whether it's bullion, bars, or coins.
It's like having a piece of history, right?
But it does come with its own set of responsibilities.
Oh, like what?
Well, you've got to think about storage, for one.
Where do you even keep a gold bar safe?
Exactly. And security is another big one. Forbes Advisor had a whole section on this, and the CFTC even issued a warning about it.
What kind of warning?
They're basically saying that you have to be really careful about scams when buying physical gold.
So it's not as simple as going online and clicking add to cart.
Not quite. You need to do your research and make sure you're buying from a reputable dealer.
Okay, that makes sense. You don't want to end up with fool's gold.
Exactly. And once you have the gold, you have to figure out how to store it securely.
Right. Like I said, my safe deposit box is pretty full already.
And the CFTC warning mentions storage scams, too. Apparently, that's a thing.
Storage scams?
Yeah, some shady operators will offer to store your gold for a fee, but then they disappear with it.
Oh, no. That's
Yeah.
awful.
It's like something out of a movie. So always do your research and go with well-known, trusted companies.
Duly noted. So physical gold, while exciting, requires some extra homework.
Got it. What about those gold IRAs I keep hearing about? I think they were mentioned in both the CBS and Fidelity articles.
Oh, right, gold IRAs. They're basically a type of self-directed IRA that lets you hold physical gold as part of your retirement savings.
Interesting. So you get the tax advantages of an IRA, but you're holding gold instead of, say, stocks or bonds.
Exactly. It's a way to diversify your retirement portfolio and get some exposure to gold at the same time.
Sounds like a good deal, but I'm guessing there are rules and regulations around this too.
You bet. For starters, there are very specific rules about the type of gold you can hold in a gold IRA.
Like it has to be a certain purity or
Yeah.
something? Exactly. It has to meet certain fineness standards, and you usually have to work with a custodian and a depository to set it all up and manage it.
So it's not as simple as buying some gold coins and sticking them in your sock drawer, I guess.
Not quite. It's a bit more involved than that, but it can be a good option for the right person. Speaking of other options, have we even talked about gold's lesser-known but equally intriguing cousin?
You mean silver?
Silver, exactly.
Wow, so we really have dug deep into this whole world of gold. From shiny bars to those gold IRAs, it's a lot to take in.
We've covered a lot of ground, that's for sure.
I feel like we've gone from me being totally clueless about gold to, actually having some idea of whether it makes sense as an investment.
Knowledge is power, right?
It really is, especially with all this talk about gold prices going through the roof lately.
It's easy to get caught up in all that excitement, but it's crucial to remember that gold isn't some get-rich-quick scheme.
Right, it's not like buying a lottery ticket.
Exactly. And speaking of which, remember those historical returns we looked at in the Forbes Advisor article?
Yeah, they were decent, but nothing mind-blowing.
Exactly. Gold is much more about that long-term protection, that stability, rather than those quick, dramatic profits.
Right, that whole safe haven thing we talked about.
Exactly. So if your main goal is to see your investments skyrocket in value overnight, gold might not be your best bet.
Got it. So not my star player, maybe more of a role player on the team.
A very important role player, though. Most experts, and we saw this in several articles, recommend having maybe 3–6% of your portfolio in gold.
Okay, so a decent chunk, but not my whole nest egg.
Exactly. It's about balance. But, of course, those percentages are just guidelines.
Right. Everyone's situation is different.
Exactly. So how much gold you ultimately decide to invest in, if any, really depends on a few things.
Like what? What should I be thinking about?
Well, your risk tolerance is a big one.
How comfortable am I with the idea of my investments going up and down?
Exactly. Are you someone who freaks out over every little market dip, or do you have more of a long-term view? You're willing to ride out those fluctuations.
I guess I'm somewhere in between. I like to think I'm pretty level-headed.
And gold being a hedge tends to appeal more to those investors who are really prioritizing preserving their capital.
So they're okay with slower, steadier growth.
Exactly. It's about peace of mind over those potential massive gains. Your investment timeline matters too.
Oh, right. If I'm like saving up for a down payment on a house in a few years, that's different than investing for retirement decades from now.
Huge difference. Investing is never one size fits all.
So we talked about gold, we've touched on silver, but how does someone actually decide which one, if either, deserves a spot in their portfolio?
The million-dollar question. It all boils down to understanding what makes each of these metals unique. Gold, as we've discussed, is seen as that steady, reliable asset, the one that people turn to when the economy gets a bit wonky.
Right, the classic safe haven.
Exactly. Silver, on the other hand, silver's got a bit of a split personality.
It's like the adventurous sibling.
That's a great way to put it. You see, silver is influenced both by what investors are doing and by industrial demand, so it could be a bit more, shall we say, exciting.
Exciting as in more volatile.
Exactly. It's that volatility that can work both for and against you. If the economy is booming and there's a huge need for silver in manufacturing and technology, well, you might see some pretty great returns.
But if the economy takes a nosedive, silver could be riskier than gold.
Potentially, yes. It's always a balancing act, weighing the potential rewards against the risks.
This has been incredibly eye-opening. Thank you so much for guiding us through this gold rush.
My pleasure. It's always fun to talk about precious metals.
For sure. And listeners, whether you're thinking about adding a little gold, a touch of silver, or maybe just sticking with your current investment strategy, remember to do your research, consider your own personal circumstances, and as always, invest wisely. Until next time.